Hi, I'm Chanaye Jackson, and this is the Idea to Empire podcast, where we help you go ahead and get advice, tips, tricks, so that we can get you out of the frustration and overwhelm as a busy business owner. Today, I'm bringing on a guest. His name is Anthony Peltier, and he's the founder and CEO of Coast to Coast Finance. I want to tell you just a tad bit about him, and his bio is short and sweet. Anthony provides bookkeeping, consulting, and fractional CFO services to busy business owners like yourself. He's based out of the Chicago area, and just so you know, he's a new colleague that I'm excited to continue to work with. And so with that said, let's bring on Anthony. Hi, Anthony. Welcome to the Idea to Empire podcast. Thank you for coming.
Hey, Chanaye. Happy Tuesday. Thanks for having me.
Let's start at the top. You are the founder of Coast to Coast Finance, so why don't you tell us a little bit more about you?
Yeah, absolutely. Thanks for the warm intro. As you said, I founded Coast to Coast Finance, headquartered here in the Chicagoland area, Chicago suburbs. A little bit about me. I've been in Chicago my whole life, born and raised, home sweet home. And I founded Coast to Coast Finance in 2021, really with the mission to promote financial literacy. You know, my entire career was in operations finance for large manufacturing companies. So friends and family, they always called me the finance guy. But they would always ask me questions about, investing, business, savings, credit, stuff like that. So I just realized there was really a shortage in financial literacy overall. So that's why I started the company, really just to share information, share the knowledge that I've gained. And that's grown, over time now, like you said, to helping other businesses, smaller companies that may not have access to full-fledged accounting and finance teams, where I can kind of come in and be very effective at a small scale using what I've learned working for very large corporations.
What kind of corporations have you worked with in the past?
Good question. So, like I said, I kind of found my home in manufacturing. That was where just things are moving very, very quickly. Product and people combined are moving together. And as a plant controller or regional controller for manufacturing companies, I got to kind of flex my finance muscle a little bit, but still be there on site on the production floor, talking to people, meeting with people, different departments, maintenance, HR. Finance really does touch just about every department in some way or another. So yeah, primarily manufacturing companies in the consumer packaged goods industry. So companies that are making things that, you can go see on the shelves of Walmart, Walgreens, wherever you go.
Why were you the finance guy?
Actually, it's kind of funny. It goes back a very long way. I think I was always wired towards numbers since a very young age. And my grandma actually got me interested in collecting coins. So I have like all these coin collection books. That was fun to do as a kid. I still do it a little bit as an adult. So yeah, ever since I was little, I was always geared towards math and numbers in general. And that was in thanks in large part due to my grandma, who got me interested in that. And along those same lines, when I went to college and decided to major in finance, economics, accounting, and my grandma had actually set up a scholarship that was for kids that had grandparents in the Steelworkers Union, which my grandfather was in the Ironworkers Union in Missouri. He actually died on the job when I was very, very little. And the union set up a pension for my grandma. She never married again, but she was taken care of through the union and that pension. And she actually created a scholarship fund, which I was able to tap into a little bit in college. So it kind of came full circle, which was just nice to think about. And that scholarship still exists today for kids that have family members in the Ironworkers Union and want to apply for it.
That's really cool. That's quite a legacy that you're coming from. So the reason why I brought you on is because now we're heading deep into, we're in second quarter. third quarter will be here before we know it. 2024 is going to pass us by. And so being an operations person like I am, I always kind of really want my business owners that I'm working with and the folks that are listening today to really think about what does a mid-year review look like? And especially because, like, as you mentioned ahead of time, that finances touches everything. So
yeah.
I really wanted to talk about that. So how do you feel about mid-year? What does mid-year sort of work look like for finances and business owners?
Mm-hmm. Yeah, good question, and really good timing, right? As we are about almost halfway through Q2, heading into the second half of the year, I think it is a great time for companies to do a mid-year review for a few different reasons. One, it gives you a chance to reflect, right, on, hey, here's what we've achieved so far. And it does also give you a chance to set goals for the next half of the year, whether that's a new goal because you are so far ahead of the first goal that you set that you need to set a new target, or maybe it's an adjustment of expectations. And I'm a firm believer in the finance world. We do what's called forecasting, right? So a forecast, especially a financial forecast, in my opinion, serves really two main purposes. One, to manage expectations and to change behavior, right? So those are really the main purposes of the forecast. And if you think about it from a weather standpoint, right, if you look at the weather, you see it's going to be kind of cold and rainy like it is today. Well, you may be inclined to grab an umbrella before you leave the house, right? So that forecast is kind of managing your expectations for the day, and it's shifting your behavior, how you go about that day to execute. On the flip side, if you give a wild forecast that's nowhere near what it should be, right? I look at the weather, it's going to be 75 and sunny. I put my shorts on, get ready to go out, and then it's snowing outside. Well, I'm going to be upset in that case, right? Rightfully so. So same for business, right? If you're in a position to be forecasting for your own business or for somebody else's, it's very important to set those clear expectations. And the mid-year review is a great chance to do that. I will say, as far as a process, in order to do a mid-year review, you would need to have set those expectations for the year prior. So if you're listening and you haven't done a full year forecast or set a full year budget, well, now is maybe the perfect time to look at the results for the past few months and make a plan for the next 6.
I mean, I love that you've brought that part up, because I think that in a lot of ways we, and I'm including myself in here, we as business owners are afraid to forecast, right? Or when we forecast, we're kind of like shooting for the moon, but unsure how we're going to get there. And so it totally makes sense that if we've set the goal, then we can sort of backtrack in it. So at about 6 months in, give or take, then it's going to mean that where are we? Are we halfway through our goal or not? And I've also, this is just kind of a funny note, I've run into a lot of business owners that are afraid of setting goals. It's kind of fascinating, to be honest. And I highly recommend that you set goals, as a side note. But it's interesting too to like think about, okay, it's no big, well, we're going to make it not a big deal that you haven't set a financial goal or goals in general. And let's start now. 6 months in doesn't mean that you've failed. Let's go ahead and get started. And it's generally fairly easy for you to understand what kind of money you've made or not made.
Absolutely. I'm a big believer in setting goals. I think there's been a myriad of studies done about the importance of setting goals, personal and business. I can't remember the exact stats, but I think you're 40-something% more likely to achieve the goal. And you're actually even more likely just by writing it down physically on with a pen and paper. I'm kind of old school like that, where I like to jot stuff down on pen and paper. But something does happen where if you write that down repeatedly, it's sort of taking things from ideation stage in your brain and bringing it, putting pen to paper, as they say, and then you're more likely to actually achieve them. So yeah, if business owners haven't set goals, then now during the mid-year review period is perfect time kind of change that.
I love that. So to put you on the spot, what kind of things might you review? I mean, finances, it seems like really broad, but what kind of like indicators might you look at when we're looking at our review?
Of course, it's going to depend on the individual business, what kind of indicators they've set up for themselves. So that's an important exercise to go through. And I try to break things down between leading and lagging indicators. Sometimes when I was working for some of these big corporations, a lot of the reports I would do on key performance indicators sometimes didn't have dollars attached to them at all. It could be something like employee turnover rate, or scrap percentages, right? That we can attribute a dollar to that, but these types of indicators, while they may not be a profitability or a revenue metric, are very important. So I think leading indicators to me are just that, right? They're an indicator that you can measure. Remember, if you can't measure it, you can't manage it. So it needs to be measurable, that then drive the future performance of the business. So an example for that might be, say, if you're in sales for a company and you have a lagging indicator of how much revenue you've generated or how many sales you've made, a leading indicator to that may be how many times you picked up the phone and called somebody, right? So if you increase the number of dials you make, you could realistically expect to increase the number of sales you make, right? So I would really try to, if I was doing a mid-year review and on the indicators, I would focus on the leading and the lag. Whereas profitability or profits are typically a lagging indicator, right? We can measure that, and we can measure that, of course. It's just one of the last things you're going to measure, because once you've recognized that sale, sold the product, whatever it is, kind of the end of the life cycle of a product. So around this time of the year, I would be looking at, one, if your business is cyclical, right? Try to pay attention to that. When I was at the candy company, most of their sales came around Halloween, right? So a lot of the prep work was going to producing inventory ahead of time so that when those orders came in for Halloween, they could fill them. And then, of course, looking at the revenue goals of the company. Are you on track? Are you pacing correctly? Those would probably be some of the key indicators that I would look at.
It's interesting that you're bringing up sort of a seasonality. And I do think that pretty much every business has a seasonality to it. And so determining what that is for you, and as you move forward, what percentage of your income might you get for that 4-month period, that 5-month period, whatever it might be, versus the quieter parts of the year.
Absolutely. Yeah. And then how can you hedge that, right? If you know those quiet parts of the year are coming, how can you hedge against that? That's why I love key performance indicators, leading or lagging, because it starts to really highlight what levers you can pull, and what effects those are going to have on the business.
Yeah, I love that. That's an excellent point. So what other piece of advice do you have for the regular schmegular business owner, for lack of a better term?
Well, yeah, I don't know if the regular schmegular business owner exists, but there are kind of key tenets of business, right? And we touched on it, the importance of setting goals earlier, especially at this time of the year. I think from a forecasting standpoint, I would always try to run 3 different scenarios, right? A a worst case scenario, a middle of the road kind of most likely scenario, and then a best case scenario like the star line. Everything goes exactly according to plan and exceeds all of our expectations, and that's what that would happen. This is a way for, even if you're not reporting to external stakeholders or shareholders or a board, for a small business, can give the business owner clarity, right, on what they can expect. So managing those expectations throughout the rest of the year. What does the saying go? Pray for the best, prepare for the worst, something like that. So
absolutely.
Yeah, and you can do that in business too. So right, let's plan for what levers you can realistically execute, or what you can realistically execute on, what levers you can pull to make that a reality, get that clarity in your mind, and then set a stretch goal. Okay, if I think I can hit 10 million this year, maybe I'll set a goal for 12, right? 20% over that. Just to give something to give. That's what we call stretch goals in finance. I don't know if other people call them that. So that could be a cost savings initiative. That could be a new customer acquisition initiative, or a units initiative if you're however many widgets you plan to sell. And then worst case scenario, I think it's a few years back now, but one of those things that nobody really expected was COVID, right? And how damaging that was to the economy. So that's one of those like worst case scenarios that probably nobody could have really planned for ahead of time, but it's important to start thinking about things like that. Well, what if you're in a brick and mortar location, maybe some sort of zoning makes you have to move locations for your business. Like, are you prepared for that? Do you have insurance, or do you do these kinds of risk analyses to plan for those worst case scenarios, even if they may never happen? If you've thought about it, you're more inclined to be able to deal with it if it does happen.
So earlier you were talking about stretch goals. And one of the things that I found really fascinating is I'm thinking about my own metrics that I track on a weekly, monthly, quarterly basis and things like that. So I was just curious, when implementing all these processes to be able to get to those bigger goals, how do you think further into what a stretch goal might actually feel good or actually be accomplishable if you're doing it right? Do you understand my question?
Yeah, it makes sense. And it's a valid question, right? Because I think as entrepreneurs and as business owners, there's something inherent about the way we set big goals. I think high achievers tend to really push themselves, and that what you consider a normal goal may already be a stretch goal, depending on what lens you kind of look at it through. That being said, like I was saying about the low, mid, high forecasts, I think you should set a challenging, achievable goal for yourself. Maybe that's to get 5 new customers by the end of the year, right? I'm just making something up.
Sure.
Do you think that is realistic and it's going to push you and that you're going to feel with that? Well, go for that. But then the stretch goal would be, would it be possible to say double that? Could I realistically get 10 new customers by the end of this year? What would I have to do to make that happen? And is it worth it, right? Because if you can get 5, you can get 10, right? That's a logical conclusion. However, the old adage of, what got us here isn't necessarily going to get us there, a lot of times holds true.
Right.
So that may mean hiring somebody, right? And you may have to take on debt or something to do that. And that could be a risk that you run. So that's what I mean with a stretch goal is it could be a star to reach for, right? Some kind of North Star guiding you that you really want to challenge yourself to hit. Even if you're going to give yourself permission to fall a little bit short of that, knowing that I'm okay with that result either way.
I like that. The goal is to hit your goal, but the stretch goal is to see. I feel like stretch goals especially are opportunities to do a little bit more experimenting, right? So for example, like I'm working on a sales process that is really, really different than what I thought I was going to be doing and what's currently working for me. But the stretch goal is like, maybe if I tried something different, would this make a big difference in my business?
Yeah, absolutely. And it's too with just in the theme of stretching, right? You can stretch your mental capacity. You can stretch your imagination. Sometimes that comes with strain, right? If your capacity is already at its peak, well, how can I increase that volume that I need to hit? What do I need to change to do that? Without breaking anything. There's some philosophy that if your business is growing, it's always going to be breaking, right? But I think setting that goal and kind of planning for that, seeing where that bottleneck moves, can be valuable for business owners for sure.
I know you had a third piece of advice.
If we're staying with the theme of mid-year reviews, right? Setting goals, monitoring performance. I think depending on where you're at in your business, if you have some layer of team, right? Even if that's just one person that's reporting to you or one co-founder that you're working with, I'm a big believer in, especially with financial results, being transparent with those. I don't think it's anybody to hide results behind smoke and mirrors or sugarcoat them in any way. And people are going to pick up on that if you try it anyway. So just be honest, share the results with the team. Say, hey, our goal is to do 50 million in revenue this year. We're halfway through the year and we're at 24 million. So, okay, we're pacing okay. We're right on the cusp there. And look, the good employees are gonna resonate with that. They want to know that they're having a result and an impact on the company. So the mid-year review is a perfect time to share some financial results. If they're great, celebrate the wins. Do some employee engagement or some employee recognition, right? Say, hey, we're having a great year, and here's how we're going to celebrate that with the employees. Believe it or not, it doesn't always have to be monetary celebration either. When I was in the factory, some of the best employee recognition things were something like a branded backpack or a pizza party. They love that. And it fosters a sense of camaraderie, and it shows that the business leaders we're all on the same team. And on the flip side, right, if you're not pacing well towards the goal, well, let's reflect on what we thought would happen, what didn't happen, what lessons did we learn, and how are we going to pivot, right, to make sure that the second half of the year is even better than the first half and better than the second half of last year. This becomes really important. Employees' bonuses are tied to financial performance of the company, right? So if you have a EBITDA number that the company needs to hit to pay out bonus, I guarantee you every employee, whether or not they're in finance, is going to care about that EBITDA number because it's them, So I believe this is a perfect time of the year to kind of share the results with the team, celebrate some wins, and reflect on lessons learned.
It's an opportunity for feedback, right? Like that's some of what I'm hearing too, is getting the buy-in from the vendor, the contractor, or even the employee that a person is working with to say like, hey, even if you're on track, right? Even if you are pacing correctly, or if you're on pace for your goal, for your revenue goal specifically, it's interesting to think about, okay, well, how hard did we have to work to get here? Was it worth it? Did we have to like beat ourselves to no end to to be on pace, or even worse, to not be on pace. So I think that there's something to that, of getting that of a 360 as well, of understanding.
You brought up a good point about getting that alignment and that buy-in from your stakeholders, whether that's internal or external. I've seen this done well. I've seen it done not so well, as far as aligning companies' mission, vision, and values with the individual teams throughout the organization. So if you're listening and you have a little bit of a larger organization with different departments and different departmental goals, it's so important to make sure that you have your big company mission, vision, values, and the goals that go at the corporate or the entity level. And then the departments that are underneath those, they need to be setting their own kind of departmental goals as well. But it's so important that those are tied to the company goal, right? It feeds the mission. Because if it doesn't, there's going to be a very strong disconnect with what the business owners are trying to achieve and what these individual teams are working towards.
I think that was all of my questions for today. And tell us where we can find you. How can people get in touch?
LinkedIn is great. I'm very active on LinkedIn. So shoot me a message. I can get to it as fast as possible. Or, if you go right to my profile, there's an opportunity to book an appointment if you want to set up some more formal time to chat.
I love that. So I'll make sure that Anthony's LinkedIn is definitely in the show notes, and Coast to Coast Finance's website is also there, so they can check it out. So thank you, Anthony, for coming on for the podcast today and helping us with thinking about the mid-year review.
Absolutely. Thanks so much for having me. I hope somebody took some value out of it.
I'm sure that they did. I know I did. All right. This is the Idea to Empire podcast, y'all, and I will see you next time. Bye.